Good morning, everyone. Tuesday, October 11th. It's time for the Mortgage Minute, where we're going to cover what's going on with interest rates in about a minute. Interesting chart right in front of us. What you're seeing here is the 10-year Treasury, the yield spread on that. That's on the left side, and you can see right about now it's around 4. And just a few years ago, even though you're not seeing the dates on the bottom of this chart, you could see the blue line when it really dips. This was 2020, 2021, where it had gone all the way back to about 0.5% or close enough to in the yield spread. Now we're all the way back up at 4. But what's so interesting, now we're looking at the mortgage rates, which you could see is the orange line, and it correlates to the right side of the chart. We're all the way up, back up again. I hate to say it, right around 7% again this week on the average. But what's so interesting is the correlation, right? It almost follows exactly, except for the time that it dipped. The Treasury dipped so low, but hey, rates were sub 3% then. How much lower could they have gone? But the difference now and what you're seeing where we are is how much the interest rate is outpacing the 10-year Treasury. It is screaming upwards, and the reality is it's probably going to continue going higher for a little bit. Why? This is absolutely, at this point, we can all agree, a Federal Reserve driven market, and they have to keep banging that drum. They have to keep raising interest rates. And why are they doing that? Well, the reality is they need to cool off the economy. That's just the way it is. And there's a number of factors we don't have time to go into right now. But more specifically, they do need to cool off the housing market. Again, not a lot of people like to hear that. But the reality was, since 2008, and you saw that the explosion, the pin pop, the precipitous drop in values, and then a pretty big swing back just a few years later when all the values came back, and then the significant rise over 10 years. But what's happened in the last 2 years with this total explosion of equity across the country, 30 to 40%, that was really driven by what? It's hard to say what. You have to cool that off, and you're going to see the interest rates continue to rise until the economy really slows down, more likely into a recessionary period beginning of next year, middle of next year, and certainly until the housing market takes a much bigger hit. The demand has to come back for buyers. Sellers need to be putting more inventory on there, and prices, unfortunately, and a lot of people again don't like to hear this, but they must come down. And I think we're going to see interest rates rise until that happens.